And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. Happy new month. Great to have you in this new month. And it's also a new quarter right here. And we have all the hot stories right now in the world of business. Let's start off now with the markets. Now we see that the NGX there, investors, equity investors, the NGX gained about 5.3 trillion naira in the first 6 months of 2023 amid Deutsche's macroeconomic reforms under the new administration. This came despite the rising inflation, social unrest, global uncertainty and other economic challenges which surely had an impact on the market during the early part of the year. The market has rallied amidst a buy interest from investors, especially in bellwether stocks. The all-share index hit a 15-year high for the first time since 2008 and crossed the 60,000 index point level to close at 60,968 points against an opening value of 51,251. That was January 3rd, 2023, implying an increase of 8,717 points, about 18%. Big jump there for investors right here in Nigeria. Let's look at what's happening with oil markets. Now, we see oil prices edged lower today on concerns about a global economic slowdown and possible further interest rate hikes from the U.S. Federal Reserve. That weighed on prices, offsetting forecasts of tighter supply amid OPEC cuts. Brent crude futures last was down about 27 cents to $75.14 barrel, settling up after settling up 0.8% on Friday. U.S. WTI crude, that's at $70.36 a barrel, down 28 cents after closing 1.1% higher in the previous session. Brent fell for the fourth straight quarter by the end of June, while WTI notched a second quarterly drop as the world's top two economies, that's the U.S. and China, lost speed in the second quarter. And with the removal of petrol subsidy, the federal government is expected to save an average of about 400 billion naira, and that's according to the Socioeconomic Rights and Accountability Project, SERP. And this is why the rights group is asking the Tinubu administration to urgently publish details of spending of about 400 billion naira so far saved as a result of the removal of subsidy on petrol. SERP is also asking for details of specific projects on which the funds would be spent on and the mechanisms that have been put in place to ensure that any of such savings are not embezzled or misappropriated. In the letter, SERP maintains that Nigerians have the right to know how the savings are spent, and publishing the details of the spending of the savings would engender transparency, accountability, and also reduce the risk of corruption in the spending of funds. And now the CBN last week announced new guidelines for digital payments providers who offer contactless payment solutions. Well, contactless payments broadly are transactions where users pay by simply tapping or waving their payment devices at the point of sale terminals. It's also called proximity payments. Well, joining me now is Mr. Marcel Okeke, former chief economist, Zenith Bank Group. Great to have you on the show. Good morning.
For having me.
So from the guidelines released by the CBN, contactless transactions will be capped at about 15,000 naira per transaction with a daily maximum of 50,000 naira. It seems contactless payments are more prone to fraud with the kind of limits we're seeing placed on transactions.
Thank you very much for having me on again. You see, contactless payment is part of the efforts of the Central Bank of Nigeria, to entrench cashless payment on the payment system here within the, financial sector. It's part of the cashlessness of the economy that they are pursuing. And so the contactless payment we're talking about is taken off as a pilot stage. So the maximum amount we're talking about, which is 50,000, is an entry point kind of maximum, so that in course of time, the CBN and the stakeholders will be discussing and agreeing on whether to adjust it upwards or downwards, okay, depending on how the system proves to be efficient, transparent, and there's not prone to fraud and all that. So it's an experimental and a kind of pilot stage thing they are doing, and that is why you have that kind of limit at this takeoff.
And other countries that use, contactless payments hardly have to confirm, identity, but some level of identification is required to actually make use of this service. Why is that?
Yes, now, our system, our environment is loaded with all kinds of fraud, and you are talking about digital payment. All kinds of digital fraud and all that accompany transactions, this time, not only in Nigeria, but in all parts of the world. You understand? So that is why, should any person want to exceed the maximum stipulated now, which is the 50,000, there will be need, for some kind of identification. But in the background, for any person to even get involved in all of this, the proper KYC, know your customer job would have been done, by the banks, so that he's a real human being, where he lives, what he's doing, blah blah blah. All that are contained in the know your customer, issues. So there's really nothing wrong in the way they are starting. I think it's something that we have to give time, and then people start knowing it better, and then key into it. That is contactless. The confidence, the ease, of completing such transactions, we recommend it, to so many people going forward. Thank you.
And you can just carry your payments like that. But who carries the burden of fraud here? Is it the service provider, the user, or the CBN?
First of all, whoever as a customer want to embark on contactless payment, you will be interfacing with the merchant. So it's the merchant that first of all, will be hit, who is giving the customer the privilege, if you like, or offering that kind of service to the customer. So he's the one that will be held responsible, and then he will, contact the back office people to trace how the, whatever, failure or abuse or cause, it will be traced. But so many stakeholders are involved. It's technology, it's ICT driven. So at the end of the day, it will be traced to wherever it is in the entire chain or in the system. You understand? But first of all, whenever it happens, is the merchant who is in possession of the gadget, you understand, which looks like a POS, that will be held responsible for even making that kind of instrument or device available to the customer.
All right, but what are you seeing for adoption of contactless payment here in Nigeria? What's your expectations for adoption?
Well, like I said, what is happening now is a pilot stage. If at this beginning it proves to be fraud-proof, meaning that you don't have cases of fraud and abuses and all that, chances are that it's going to do well going forward, because Nigerians are getting used, to cashless transactions. So people carrying cash all over the place is becoming a thing of the past. And so this is one of the products that the Central Bank of Nigeria has come up with, so that that culture is being entrenched. So over time, maybe the next couple of months, or maybe by the end of this year, people will now see that this is a safe way of, doing payments and all that. And people will start buying into it for convenience. You understand?
Right. Well, I guess we'll keep tracking, see how adoption grows. Thank you so much, Mr. Marcel Okeke, the former chief economist at Zenith Bank. It was great having your perspective today. Thank you so much.
Thank you, too, for having me. Well done.
All right. Yeah. So we're talking contactless payments there. But now we'll take a break. When we come back, we'll get a sense of what the Tinubu administration has planned to attract foreign direct investment into the country. That's our next conversation. Do stay with us. Welcome back. Well, foreign direct investment into Nigeria plunged by a third. Data from the National Bureau of Statistics show investment fell to $468 million in 2022 from $698 million a year earlier. FDI has collapsed about 90% from a high of $4.7 billion in 2008. Also, Nigeria ranks number 8 on the Africa Industrialization Index that was released by the Africa Development Bank group in November 2022. Well, what's the Tinubu government going to do about this? Joining me now is John Wajumogu, Special Advisor to the Presidency, Industry, Trade and Investment. Great to have you on the show.
Good morning. Thank you, Mr. Williams.
So I guess, first of all, congratulations and order. The last time you were on this show, you wore a different hat, but now you are the Special Advisor on Industry, Trade and Investment. Congrats on that.
Thank you very much. And I'm quite humbled that the President will allow me to have this responsibility to be part of the team in looking at solutions to the many challenges we face as a country.
Yeah, and talking about challenges, looking at the data, FDI has dropped a great deal, and this government definitely has a lot of work to do, in attracting foreign direct investment. What is the immediate plan to reverse this trend we've seen with FDI? What do you think we should expect, in the short term?
Right. I'll start with, there's a statement, a fairly popular statement that capital is a coward, is a cowardly bird, and will fly to locations that are sure it is safer return. And with that, in order for you to be able to attract investment to any location, Nigeria included, you would have to create the right conditions that will facilitate and be attractive for investments to come in. And in that regard, the action steps that the President Tinubu administration has taken shows a clear signal to the investment community that Nigeria is open for business, and we're trying to create the right business climate for capital to flow into. The decisive action that President Tinubu took in removing the fuel subsidy, as well as unifying the exchange rates, removes the destructive impact that both regimes had on the economy. And we can see the positive implications of that already reflecting in our macros, with improved investor optimism towards Nigeria. There was a recent analyst report that came out of Bank of America, which indicates that implied Nigeria's rating, which is a somewhat subjective measurement of our credit rating by investors. It's trending and is adjusting much faster than our actual ratings. That means that investor confidence is already increasing in that regard towards Nigeria, and we should start seeing the positive knock-on effects of this positive investor optimism towards Nigeria in different aspects of the economy.
And I know foreign direct investment is great and all, but we see diaspora remittance in 2019 was about $24 billion compared to FDI of about $3 billion. But the downside with most of the diaspora remittances is used for consumption. How do we change that? Well,
ultimately, you're right. In the last couple of years, we've maintained about an average of $20 billion in diaspora remittance that's coming into the country. I mean, that's a huge source of liquidity and a source of being able to enhance the pocketbook and the purchasing capacity of your average Nigerian, because these remittances go to pay for school fees, they go to pay for healthcare, and they go to pay for other consumption needs of our population. But now the next step is to be able to triple or double X that amount, and by creating investable opportunities that some of these remittances can go into. And I think remains a huge source of liquidity for the country, and it's something that, as a group, we are looking at in trying to find investable opportunities, in designing investable opportunities for a huge source of investment flow to find opportunities to be able to generate earnings. And this has a multiplier effect, because as those investments go in, they often compound, creating more and more opportunities. So it's a key source of investment flow, and a key source of also stabilizing some of the macros, particularly the Naira, because unifying the exchange rate is not a silver bullet. You have to sustain it and accompany it with other complementary actions, and of which being able to harness the large diaspora capacity that we have in being able to create investment opportunities for diaspora Nigerians to be able to invest into. And another issue as well is that as a continent, we are not retaining the investment capacity that we have within the continent. About 40% of private investment in Africa is made outside of the region, compared to, say, 3% in Asia. So we are creating, by making the business climate much more conducive, we're able to convince our people that our investment should stay home and help build our economy than seeking better returns elsewhere. We have to make that case that better returns can be achieved here, particularly given the large positive, favorable attributes that we have in terms of population, in terms of a young population at that as well, and the large factor endowments that we have in Nigeria, and the huge market we have, the largest in Africa. So a lot of positive attributes that we can use to drive a robust economy.
Right, I guess we need to get Nigerians abroad investing in other matters now instead of just consumption right here in the country. But we know the unification of the FX rates is definitely a step in the right direction. We've seen companies, exit Nigeria because of the dollar shortage, and restrictions on repatriating funds. What's the plan to get, more foreign currency into our reserves? The last report I got, it says dropped a great deal in the first half of 2023.
Well, this is a multifaceted and long-term process, but as a famous economist said, in the long run, we are all dead. So what can we do in the short term to be able to alleviate some of the more painful impacts of the exchange rate unification? Because we've seen costs push inflation increase as a result of higher production costs. Now, the effort that have been taken in being able to address the macro issues that were caused by having multiple rates will result, at least in the short term, in higher foreign portfolio investment coming back into the economy. Those are usually pretty liquid and can move much quicker than a foreign direct investment. So we expect to see a higher inflow in that regard. The diaspora remittances as well, once they see investable opportunities for them to go into in real estate, in agriculture, and other key sectors with high transformative impact, we're going to see more liquidity coming through that channel as well. And one also have to recognize the distortive impact, as I mentioned earlier, that having multiple exchange rates had in the economy. So, for example, a number of beneficial trade agreements couldn't be executed as a result of capital repatriation issues, and a lot of investment couldn't come into the Nigerian economy as a result of issues around capital repatriation. But with this no longer being an issue, you're going to see a rise in investment flow, and that will manifest in terms of new production capacity. It would manifest in increase in job creation, and would also manifest in increase in GDP. And all of that will reduce the pressure that in the short term right now that we're having from the change in exchange rates.
Let's look at, industrialization now. Nigeria ranks number 8 on the African Industrialization Index that was released by the Africa Development Bank Group. That was in November 2022. With an unemployment rate at about 33%, what can be done to achieve, Nigeria's industrialization objectives? Getting it right will definitely, create more employment for our teeming youths.
Right. Nobody ever got, no country ever got rich by exporting primary products. We have to increase our share of the value distribution of the global supply chain, so we need to industrialize. And there are multiple ways that we are looking at it. On one hand, you have programs such as the IDICE program, which is the investment in digital and creative economy, whereby it is targeting our biggest resource, which is human capital, in being able to provide support for our teeming youths to gain capacity in the digital economy and creative sector. And we are in the midst of what they call Industrial 4.0. And what is really driving productivity, there's been a pivot in value exchange from a factor-based economy to a knowledge and economy, digital-based economies. And with that, with such program as the IDICE program, we're able to equip our youths with the skill of the future, of the work of the future, and being able to gain from the benefits of the Industrial 4.0, as we've already seen it being manifesting in 4 out of the 5 so-called unicorns being Nigerian companies. So we're trying to take advantage of this foundation that's been created and supercharge it, being able to grab a bigger share of the digital economy that is driving a lot of productivity right now. But if you put that aside and you take a look at what we need to do to build up our industrial stock and our manufacturing stock, we have the good thing is that we have a policy that, at least from a policy standpoint, lays out a roadmap that we can take. We have the Nigerian Industrial Revolution Plan, which outlines a roadmap that, if executed properly, can get us on that pathway in improving our industrial stock. And with that, once we create linkages with our investment policy, which is a policy that also has been in place and signed off, it would enable us to engage investors and give them the proper confidence to be able to invest, and then using our trade policies to engage properly with other countries and create that investment flow into our economy and being able to drive local production capacity. So for us, being able to execute our industrial policy, our investment policy, and trade policy is very key in being able to achieve the industrial goals that we've set out for ourselves. And in addition to that, there are specific targeted intervention policies that we anticipate would have transformative impact on the economy. So for example, being able to identify corridors that can be enhanced through an integrated trade investment, in being able to make sure we have the right trade enabling infrastructure to catalyze commercial activity and business activity in those key corridors. For example, you have the Lakaji corridor, which is one of the most commercial corridors in Africa, and being able to target trade facilitation infrastructure, railways, industrial parks, energy, so that businesses that operate within those clusters it will reduce their cost of production, and being able, through economies of scale, improve efficiency across companies that operate within that space, because they are now not burdened by having to build the necessary infrastructure that is required for them to either evacuate or produce their goods. But through sharing such trunk infrastructure, so-called trunk infrastructure, their cost of production will reduce. We will then manifest in higher competitiveness of our products for exports, and also increase affordability for local consumption.
Right.
So to your point, industrial policy is really key for us to achieve any of the economic goals that we've set out. And the first part is being able to resolve the macros around the distortive effect of the subsidy, the fuel subsidy, which has now been removed, the multiple exchange rates, which have now been removed, and can provide that business climate environment that would give confidence for investors to come in. Now, you have to complement that with also having things like, sanctity of contracts, a process for adjudication of claims, so that to further enhance that confidence that investors are showing by bringing their money in, and then identify targeted transformational investment vehicles through which those business climate, the potential of the business climate, the good business climate, can manifest. And you do that through providing those trunk infrastructure I mentioned earlier, trade enabling infrastructure, trade facilitation infrastructure in terms of roads, railways, and cost of energy. Now we have what it's called the decade of gas, and the implementation of that, it's designed to reduce one of the highest cost inputs and one of the major hurdles that has stalled our industrialization, which is the cost of electricity. Through harnessing our massive gas endowment, we're able to reduce costs of production by reducing the cost of electricity. And when you complement that with your ability to distribute products across the country and also for exports, then your productive capacity is enhanced.
All right, Mr. Wajumogu, so much to unpack there, and definitely we need to export more, at this time, so that we can get more, dollars into our coffers. Thank you so much, Mr. John Wajumogu, Special Advisor to the Federal Government, Industry, Trade, and Investment. It's great having your perspective, and congrats on your appointment.
Thank you very much.
All right, so after the break, we'll take a look at what's happening with the manufacturing sector, with the unification of FX market. How's that industry performed in the first half of 2023? That's our next conversation. Do stay with us. This is Business Morning. Welcome back to watching Business Morning live on Channels Television. Now to our next conversation. According to a new report by the National Bureau of Statistics, the value of manufactured goods imported into Nigeria declined by 2.11% in the first quarter of 2023. Also, Nigeria's manufacturing sector growth hits a 3-year low in the first quarter. But what can we expect for the manufacturing sector in the second half of 2023? Joining me now is Mr. George Onofuoka, Managing Director, CEO, Coleman Wires and Cables, joining me right here in the studio. Great to have you. Good morning. Happy new month.
Happy new month.
Happy new week. Happy new quarter. So much newness. And the last time you were here, a lot has happened.
Yes.
We have a new government. We've seen the FX market being unified.
True.
Fuel subsidy gone. How are you seeing all of this and the manufacturing sector's performance in the first half of 2023?
I think we were bound to see a negative anyway. When you look at it, quarter 4 of last year, we had the redesigning factor, which literally hit every manufacturer at that point in time. Then you had the first quarter factor of 2023, the same redesigning factor got worse. And you had the ability for people to spend being made difficult, and at the end of the day, you need to spend for anybody to actually sell you something. And eventually, on the simplest factor, on the simple part of it, it's really the negatives. So most manufacturers ended up with a negative balance sheet at the end of the day. So their P&L was going negative in Q1. So seeing the figures dropping 2.1 was definitely factual. It was going to happen. And we had already seen the trend from the Q4, and then we saw the trend actually end up backfiring on everybody by Q1 of 2023. Eventually, what we've seen in Q2 of the year is similarity. The only difference is that now you had this impact of the election, which also, plus the negative of the redesigning factor, we ended up with now, election over, new government, new optimism, and I believe that's where we have to now start looking at where's the trending going between the next 2 quarters and the future of the market, and what would be the repositioning. So you take the negatives first. Now, what are the negatives? Now, to anybody redesigning, secondly, if you look at what the FX unification has cost, which is part of what we discussed at Sunrise, I think a while back, and everybody asked, what do I think? I said, first of all, unification, subsidy removal needs to go. And eventually, quite a few of the things that was discussed on that day in Sunrise, literally almost 50% of it is what the government ended up doing when we saw it. So we're positioned for it. So going forward.
But it comes with a lot of pain, though, with the subsidy removal.
Now, I have never seen anywhere in the world, or even in a normal business, you cannot create success without saying you had sacrifices made. Now, if anybody says it did, please, I'd like to meet them. Now, the reality is we had to make sacrifices. Subsidy had to go. FX unification had to happen. To a manufacturer, FX unification is immediate impact on your bottom line, which is you're going to have exchange rate losses. Now, you have an exchange rate losses that's going to happen. In this case, we have 2 types of exchange rate losses. We look at it from the official point of view, then we look at it on the unofficial point of view. A 460 to a 760, you're looking at a 65% devaluation. Pure and simple. Then you take the real factor, which is where all the manufacturers have been. I don't know where CBN was for all this while. Most of us were looking at the window at about 630. Take a 630 to a 760, you're looking at a 20 to 25%, depending on what rate you got. Now, that has happened, but neither was it that they were getting the money. No, we didn't get it. It wasn't available. So the reality was unification needed to happen. Now,
and with the unification, would you say manufacturers are starting to see that foreign currency already?
I think they are, because the window has changed. It's now an import-export window that allows everybody in and out. They are seeing it, because now it plays in the fact that exporters, which were actually selling at the way they felt they wanted to sell, now can enter the window at a free rate. Me and you agree a rate, we do the deal. If I don't, that's my choice not to sell. So the scenario is changing. Yes, the instantaneous impact of the uncertainty is why we're seeing the figures at the 750, 760, 780 type of mark. Now, is it going to remain that? I don't think so. Even if you look at the figures coming out from Bank of America saying Nigerian Naira is undervalued at where it is today, I totally agree. I see a Naira really after devaluation of 650 to 660 because of the impact element of the devaluation. Now, when we look at it, impact element. Now, you devalue a currency. You actually unify, you make it available. Now, you make it available, my cost of my certificate of importation is guaranteed. I'm an investor coming into it. Unfortunately, I'm not a great believer in FDI because most of our FDIs in Nigeria are short-term related money instruments, which means they're going to stock markets, money instruments, treasury bills, bonds. They're not really going, the majority of it is not going to long-term. Now, which means that
that's FPI hot money.
Hot money, right? So we are at risk anytime there's a problem because everybody is trying to go out immediately as the same way they rushed in. Now, we look at it that the manufacturers are taking a hit. Then how do you soften the blow of the heat? So it's a solution that you have to look at it. It happened before. Between CBN and BOI, we had the intervention funds that refinanced gaps. Now, I've created a gap. I've maybe lost $1 billion or $2 billion. Now, that can impact my wage bill. It can impact my workforce. It can mean I need to lay off more people. Now, I have no working capital to work with. Instantaneously, what do you do? Now, this is where the banks have to open their eyes. The banks, first of all, the commercial banks, need to instantaneously start looking at refinancing. Now, how do I restructure your loan? How do I restructure your working capital? How do I free up new working capital for the manufacturer to actually continue?
And that's after raising rates to fight inflation.
The rates, where I would say now we have to come in and come in a bit differently. It's coming the same way the CBN came in under Sanusi, where you had the CBN BOI intervention funds, which were there geared towards refinancing gaps. It wasn't even geared towards new business. It was just geared towards refinancing gaps. At that time at 6+1, which was 7%. Now, but today, yes, interest rate will be about 9 or 10 or 12. You still close a bit of the gap. You stop the actual leakages. You stop the actual bleeding for most of these manufacturers. So for me, my proposal would be, how do we quickly stop the bleeding? It's medium-term solutions. The long-term solution is still going to end up paying us for the sacrifice. The second issue is the subsidy, which affects the manufacturers straight off. The bottom line is we have workers who have to come to work. Some of them have their own cars, some of them don't, some of them use public transport.
And we have to pay increased salaries at some point.
Now, my argument is this is the sacrifice we have to make now. Our wage bill would go up. There's nothing we can do about it. It has to go up. Now, because one, part of your wage bill is transportation. Transportation, some of your housing, some of your other feeding allowances come into it. Now, bottom line, transportation has gone up. Most likely, I'll say transportation bill is going up by about 100%.
Right.
But on the wage, what is the impact? Now, it's where we don't look at the impact on the bottom line. Now, for any manufacturer, two parts of your wage bills: the manufacturing cost wage bill and the administrative cost wage bill. For any normal business, it's just purely administrative cost on your profit and loss. So it's impacting your bottom line of your profit before tax. The question is, and this is where we need to look at the statistics, what is the statistics of my wage bill increase against, one, my turnover, two, against my profit after tax or before tax? Let's just make it simple, before tax. Today, what I see as an impact is 1% increase in the cost of the differential between a wage bill increase of about 75 to 100% straight off onto your turnover figures, basically. Secondly, you have the second figure, which is the profit before tax. At the moment, if you look at it, if you blend it well enough, it's a 5 to 10% impact on your bottom line. Now, 5 to 10% impact for wages, I don't think is the biggest sacrifice. For one thing that those same manufacturers or this country would benefit from on the long term. You've just said it earlier. The government has actually announced 400 billion savings. If we just say within the first 10, 20 days, they saved 400 billion, take the average, extrapolate it again into a month and just say, they will average of 1 trillion savings per month, times 12 is 12 trillion. Now, 12 trillion changes everything. It was money me and you or the federal government did not have to spend.
Right.
Now they have it to spend. Now you take that money and put it back into this economy. Take, for instance, that, okay, some of it is going to go into debt financing, recurrent expenditure.
So it's all about the spending of that money.
To me, it's the spending of that money. If I take half of that money, 6 trillion, and put it back into roads, housing, schools, hospitals.
Healthcare, yeah.
Healthcare. Now, the key question is, those capital projects needs to be done by people.
Right.
Needs to be built by people. Means to impact people. 6 trillion straight back into the bottom line of this economy. Every manufacturer, every business will feel the impact.
Right.
Then we would be able to actually deal with the long-term issues, because the wage bill increase, the cost increase will now equate back with the actual increase in business.
Right. Wow. So much to unpack there, and definitely everyone's looking out for the second half. At this point, we've had all the shocks, for the first half, and it remains to be seen what the manufacturing sector is going to do next, going forward. And we're expecting a lot from this, administration, definitely. Thank you so much, Mr. George Onoforkom, MD, Coleman Wires and Cables. It's always great having a perspective. Thank you so much. All right, now, so we're going to be heading to the markets just in a few minutes. Do stay with us. This is Business Morning. All right, now let's head on to the markets. Now we have Willie Bong with the details. Will.
Good morning.
Good morning. Quite an incredible first half, for all the markets.
I'm lost.
Yeah, lost for words at this point.
Lost for words. I don't even know what to say, how to describe it.
Too much profit, too much gains.
Too much gains. But we're not seeing that much gain in the FX market, especially for transactions. We rightly understood because of the pressure now for FX. Lots of people, demanding the dollar. So, and the supply is, we're short of dollar in the country of forex. So it's understandably that we would see that low pressure and that decline in our forex reserves as we saw last week. And we expect maybe more, if we get maybe more inflows from the crude oil sales or any other oil exports, maybe that will boost our, we really do need it. Now, we saw the FX reserves continue to decline last week. Gross reserves position declined by $86.76 million week on week to close at $34.22 billion. And if we do know the second half, we saw the full-on $2.9 billion decline in the first half of 2023. That's the most we've had in 6 years. Now, this decline continued since, the new administration came into power in May. And this is despite the unification of the Naira and the introduction of a managed exchange rate flow that we had before that. Now, but let's look at how the forex market performed last week. We did see that uptick, 1.8% there to close at $707.23 million. We saw that total in the forwards, futures, there was really nothing going on in the futures market. Total derivatives was up 917.54% to close at $62.07 million. That's for the derivatives market. But FX spot was down. That's the I&E window was down 6.3. That's total value of transactions that took place there to $645.16 million. And then we've looked at the Naira, the NAFEX window. This is still for the I&E window. If we look at the NAFEX, we saw that there was a 2.93% decline. The Naira depreciated against the dollar to close at 751 Naira 98 kobo. So the previous close of 759.29 Naira 98 kobo. It opened the week with. We're going to bring in Bosun Obembe. Is a money market dealer at Access Bank. Is going to be giving us, sharing some insights as to how the performance, his take on the performance for the first half and his outlook for the second half that we've gotten into. Good morning, Bosun. It's good to have you on the program.
Good morning. Thank you for having me.
Bosun, we've seen that report that the external reserves, it did open the year at $37 billion, but now it's dropped to about $34.1 billion as of June. That's the last quarter. I mean, we ended June with. The data is showing the largest half-year drop since 2015. How did we get here, Bosun? We all know, probably we know, but could you just tell us with this, what impact this will have for the second half?
All right, like you said, the external reserve opened at 37 and closed at 34 billion. This is still quite high. This is a take now of about 2.8 billion when you look at it between opening of the year and half year. The reason for this is we will not be having a lot of inflow, both foreign portfolio investment. We will not be having foreign direct investment due to the insecurity issue that we had. And then at the start of the year, we have different windows for FX, and the crude oil output so has been very insignificant that will not be meeting the OPEC quota. All of these contributed to a low accretion to the external reserve. And like we have debt that we have to service, and those debts are serviced in foreign currency, not Naira. And then we have some intervention that the CBN did last year. We have forwards that are maturing, which CBN has to deliver those forward. And where would they get this money? They have to take it from the external reserve. So for me, I think we might still see a decline in this external reserve. Maybe by the end of Q3, we might start seeing improvement. The quick win that we can see, we can have, if we want to see an increase in this external reserve, is maybe if we have this, we go issue Euro bond, and I don't think that's the what government wants to do now. So for now, we keep managing it. But thankfully, the investor and exporters window, the rate has been unified. So we start seeing inflow coming from foreign portfolio investors. Before, like in your report, you mentioned that there was nothing on the NDF market, but on Friday, so CBN has started the NDF market. They brought it back, and so they will start giving quotes for 13 to 60-month contract. So based on this new notification from CBN, what this entails is the foreign investor can actually come into the market to invest. The only constraint currently is the yield. The yield in the fixed income space is quite low when you compare to what is obtainable in other sub-Saharan Africa or what is obtainable even in developed countries. So, like take for instance about Treasury B, the rate closed at 6.23%. The yield, the last option. So when you compare this with inflation, so an investor coming to do a carry trade, it's going to be a negative carry for the investor. So the only thing that I think the CBN now has to work on is the yield. So once the yield is attractive, then we see this foreign portfolio investor coming. By the time they start coming, we'll have the dollar flowing in back, and we'll be seeing some of them going to the external reserve. There will be less pressure on the CBN to intervene in the high earning market.
Okay, Bosun, thank you so much for the insight. We do look forward to how the second half would play out, especially for the fixed income market, where we're seeing some bullish sentiments continue to persist to the last quarter. Thank you so much, Bosun Obembe, money market dealer, Access Bank, for sharing your thoughts on the program.
Thank you for having me.
So, Ladi, that's how we're seeing the equities markets, closing on that 15-year high for this, second half, on the first half of 2023. I'm looking forward to the second half of 2023.
And all those stocks that made incredible gains in the first half, what are they going to do next?
You saw Etherna, you saw Charms, you saw even the small cap stocks are making waves this time around. So it's not just all about the large caps in the market. So we look at
just trying to decide what to do next for the second half.
Just please decide.
That's what investors have to think about. This time. That was Will there giving us the details from the NGX and the fixed income market. Let's take a look at what's happening now in the UK. We'll have Juliana joining us this morning. Great to have you, Juliana. So Twitter was trending over the weekend. Elon Musk back in the news again. This time, Twitter is restricting unverified users to see how many posts they can check out in a day, about 300 posts per day. What are the reactions in the UK to this? Juliana, you might have to unmute. You might have to unmute, Juliana. Hello, Juliana. Okay, I think Juliana is going to have to unmute there so I can hear her. But Juliana, if you can hear me now, you can say something. All right, looks like Juliana can't hear me right about now. But let's take a look at what's happening with other markets now. We see Bitcoin there declined heavily below the $30,500 support, even spiked below the 29,500 point before the bulls appeared. If we look at the market now, we see it's greed. Still have greed right now, 62 points. That's what we're seeing for the market. That's how investors are feeling in this market right now. They're feeling quite greedy. They're feeling quite bullish, in this market. Let's see the top cryptocurrencies that we track. We see Bitcoin there, holding on $30,659, up 0.52%. Ethereum, wow, close to that $2,000 mark at this point, 1.59% up this morning. BNB, $247, up 0.86%. Just a marginal gain we're seeing with BNB this morning. Cardano, that's up 0.98%, almost 1%. We'll see XRP, the laggard this morning, 0.61% down. Still have that case to watch with the US SEC. Right now, what's going to happen? Is XRP going to be a security or not? Still the discussion right there in that market. So it's not looking so bad to start the second half of 2023. Let's bring in Michael Inaji now, financial market analyst. Hello, Michael. All right, we'll try and get Michael. Let's look at the top gainers this morning now. Let's see who's topping the counter. We see Comp there. That's up 20.26%, $64.36. It's topping the gainers counter there with double-digit gains this morning. Not seeing double-digit gains in a while. GRT, the graph, 17.10%. That's 12 cents. So we're seeing double-digit gains this morning with top gainers. Let's try and bring Michael again. Hello, Michael. Good morning.
Hello, Letty. Good morning. Thanks for having me.
Great to have you, Michael. So, regardless of the fear, uncertainty, doubt, regulatory issues, you see Bitcoin still almost doubled in price in the first half of 2023. What are you seeing for the second half?
What I do see is a lot of institutional building. We might be in a bear market, but with the fervor that we've seen institutions try and get an ETF launched, we're seeing a lot of interest in that regards. So this bear market, like any other bear market, is for building. And so that's what we're seeing these institutions laying the groundwork for. So you're seeing with a lot of fervor, these companies are going and they're trying to do whatever they can to get this filing across the line.
Right. So looking at the first half now, which altcoins outperformed for you?
So far for the year, I think the altcoins that outperform as of late would be Bitcoin Cash. We've seen it in the last couple of weeks have a almost 300% run, and Litecoin as well. Those are some coins and also DeFi coins. Like Aave and Compound, those have been doing really well. I think as we go further into this cycle, I think the smart money starts picking up the high market cap plays. And that's one of the first few places that you're going to see money trickle into in crypto.
Looking at the second half, do you expect more regulatory tension on the industry?
I really do think the second half of this year is going to be clouded by regulatory tension because you have the ETF on the horizon. We can see that the moment the news came out last Friday that they had to refile, the Bitcoin dropped $1,000. I think we're going to be jittery until we get some guidance as to where we are going to be in the future.
Definitely all eyes on the second half at this point. Any picks that you think are going to outperform in the second half of 2023?
The coins that I think are going to outperform, I do believe Bitcoin continues at least to somewhere in the 40,000s. But NKN, it's a laggard. It hasn't really moved much yet, but I really do believe the coin could go another 4 or 5x higher from where it currently is to about 50 cents.
All right, all eyes on the second half at this point. Thank you so much, Michael Nnaji, financial market analyst. Thank you.
Thank you, Letty. Bye-bye.
All right, now let's flip over to the top news this morning. We see Leo, $3.79, down 5.60%. It's a single-digit loss, but the biggest one we have this morning, Ape coin there, 0.91%. One of the Ape Yacht Club there, that's token. Axie Infinity is also down. Looks like the Metaverse coins at once down this morning. XRP getting on that counter there, 0.37%, and Lunacy 0.28% down this morning, less than a penny. So the market is still quite bullish at this point. We're seeing the second half start off quite well. Who knows what's going to happen with Bitcoin next going into the second half? But we hear Michael there saying that he expects more bullish momentum, for the market. But it remains to be seen. Definitely, this market is quite volatile. Well, that's the show today. That's how the market is looking. Don't forget to join us at 1:30. Incorporated for more updates and developments in the world of business. And if you want to watch this again, just head over to our YouTube channel and you can just check all our other productions. You can also visit our website, www.channelstv.com. From me and the team here in Lagos, it's bye for now.